everybody, and welcome to the week ahead. My name is Tony Nash. Today, we're joined by Brent Johnson, Tracy Shuchart, and Albert Marko. We've taken a little bit of a break, so we're back after a month. Thanks for being patient, guys. I know a lot of you guys have asked us to come back, and that really means a lot. So we've got a few key themes. The first is really talking about equity markets, and it's titled Party On. We've seen things turn down a little bit over the last couple of days, but really the question is, how sustainable is this market? The next topic is what stops the commodity bull market, and we'll dig into that with Tracy. And finally, we're going to talk about China, Russia with Albert. So Brent, thank you so much for coming back.
Yes, sir.
I'm so grateful.
Happy to be here.
And it's always good. And then having the three of you on here, it's such a great discussion. So I want to ask a few things in markets. So of course, Nvidia reported this week. It sucked all the air out of the room. On Thursday, you sent out a chart showing the IT sector in green and everything else in red. And honestly, that kind of makes sense to me in terms of where the markets are right now. Precious metals are elevated. Earnings in general seem pretty good, actually. They're down from a couple of years ago, but things like mentions of inflation are down from a couple of years ago as well. That cuts both good and bad ways in terms of companies being able to justify price rises. So we've got the VIX at the lowest level since pre-COVID, except for a short time last December. It's kind of at lows since pre-COVID. Yep. Short positioning is low, right? So things seem kind of okay. And so it feels like the perception in US markets is that there isn't really significant downside, or if there is, maybe the VIX is telling us that people think they'll be bailed out. I don't really know. In addition to that, in the Fed minutes, we saw them more hawkish than we expected because Powell comes out as so dovish almost every press conference, and then the governors have to come out and recalibrate the message for the week or 2 week tail after that. And on the downside, we've seen guys like Target and Cracker Barrel and these guys who were darlings 2 years ago really start to fall apart in terms of their price action. But it all seems to come back to Nvidia overshadowing everything, which I guess is great. And as I looked at this, it reminded me of that old Chuck Prince statement where he says, as long as the music is playing, you've got to get up and dance. So help me understand, are we in a fearless market that will keep rising? Are we in a fatigued market, or is it somewhere in between?
Well, I'll take the easy way out, and I'll say it's somewhere in between.
Of course.
And not just because it's the easy way out, but actually, that's actually what I think we're at. Like, if you look at the numbers and you look at the economy's not in bad shape. I mean, unemployment's low. Like you said, earnings are fine. Right. Rates they're not low, but they're not going higher right now. I mean, they're starting to tick a little bit higher, but they're not, we're not in an aggressive rate hiking cycle. Right. And the Fed has pretty much said the next move is a cut. And so, like I said, if you just showed up out of nowhere and you looked at it, you wouldn't say, oh my God, this economy is going to fall off a cliff tomorrow. You'd certainly look at the debts and say, wow, that seems a little stretched. But just the other numbers don't look that bad. But the question then becomes, what happens next, right? And I think even though things aren't necessarily bad right now, I think they have the potential to turn down fairly quickly if a few things go wrong. So I'm long stocks. I think you have to be long US equities, but I have them hedged because I think the market is pricing in too low of a probability of something going wrong. And so if you have, just from a very big picture standpoint, if you have the VIX at let's just call it its all-time low, and you have equities at their all-time high, that's not a horrible time to buy some insurance, right? Just forgetting everything else, you buy insurance when it's cheap. And so that's kind of where I see things. What I would encourage people to do is to kind of understand why we got here to begin with, right? A lot of people thought when we started raising rates, that would be horrible for the United States, and it would throw us into an immediate recession. And largely, I think the reason it didn't, and to be honest, and this kind again, I hate to always kind of bring up my theory, but I think my theory largely explains it, is the dollar milkshake theory is basically a derivative of the imperial circle. And what the imperial circle says is Soros came up with this decades ago. And he basically said, if you have a country where interest rates are high, so it attracts capital because you get a higher level of interest, and then combined with that, you get high fiscal spending by the government. So they're kind of pushing production, they're pushing money into the system. You have a situation where the currency will rise because it's attracting capital and money's coming in from outside, pushing the currency higher. But because the government's spending so much money, and until you fall off a cliff, it actually pushes things higher. And that's largely what we've seen over the last 4 or 5 years. And it's largely what we've seen since fall of 2022, because the first 9 months of 2022 were bad because they were aggressively hiking rates. And it wasn't the level of rates that was causing equities to fall and for risk to rise. It was the uncertainty of where risk going or rates were going and the expectation that they were going to continue going up. Once they stopped going up, even though they've remained high, everything really kind of took off from there. And again, I think it's largely attributed to this imperial circle. Until you hit the wall of refinancing with higher rates are actually stimulative, especially if you have a government that's spending out of control.
Sorry,
So
can
I
you
think
can
that's
you,
what
can you
is
say
pushed.
why are higher rates stimulative?
Yeah. Well, because largely the people who have liabilities are the lower class, and the people that have the assets are higher class. And the people that in the higher class, they refinanced all of their loans at very low rates, and now they have those locked in. But they're also the ones that own treasury bonds and stocks. And so with dividends higher and interest rates higher, the government's putting more money in their pocket every month or every quarter whenever those interest payments on the debt comes due. And and again, you know, it will eventually end, but until it does, it's almost like speeding up into the wall on a race car, right?
Sure.
You're going around the corner and you're going faster into the corner. Eventually, you're going to mess up and you're going to hit the wall, but until then, you're going pretty fast. And so I think that's largely what's explaining this. And so while it won't surprise me if equities continue to go higher, I thought that this would happen, but to be honest, it's worked better than I thought it would. And I haven't been as bullish as I should have been, right? I thought equities would go higher. I didn't think that they would go this high this easily. And so to your point, when everything's high, when VIX is low, when the put call ratio is low and positioning is all offsides, I think that's a good time to be at least nibbling on some insurance, whether it's puts, whether it's taking some shorting a little bit to hedge your exposure or selling some profits just to lock in some gains. I think this is not a bad time to be doing that.
Okay, I want to go back. That's great. Thank you so much for that. So I want to go back to early on, you said debt is a little bit high. So with dramatically higher rates than we had 3 years ago,
Yeah.
debt is higher than it was 3 years ago. So what impact, like I hear you talking about the race car going toward the wall. What happens for that race car to hit the wall?
Well, I think when you have enough people or institutions or whoever has taken out these loans at lower rates, whenever they start resetting in a big enough number that now their mortgages have doubled or tripled in, the payment, or their car payments have doubled or tripled, or, they bought the building or whatever it was when rates were 2.5% and now they're 5.5%. When enough people get reset at the higher rates, then I think you hit the wall. But, until then, I think that largely explains why we are where we are.
So it's a little bit of kind of momentum from low rates, and people feel like they have more money or something.
Yeah.
And prices are rising, so their view is I should buy it now instead of buy it in 6 months or a year. Does that work?
Yeah, and I think that's fair.
Okay. Now, when you talk about the Fed, we did have some people in the minutes who were talking about pushing rates higher. And I think that spooked people because the assumption has been June cut. And we've even talked about that here. Maybe I can't remember if you were on here or not, but I know with Albert and Tracy, we've heard people say June cut. And it seems like that's not really plausible given the notes or the minutes.
I think it's pretty unlikely at this point. We're pretty. I mean, we're pretty close to the June. I mean, that's 2 or 3 weeks away now.
Right.
Barring some kind of cataclysmic, correction in asset prices over the next 2 or 3 weeks, I think the June is pretty unlikely. And then there's some people that said if they don't cut by June or July, then they're not going to cut because they can't cut right in front of the election. I kind of disagree with that. I think if they want to cut before the election, they'll cut before the election, regardless of what people say. And I kind of feel like they will end up cutting one time just to do it because they said they would, but I don't think that there's going to be multiple cuts. In fact, I don't think there'll be more than one cut again, unless the market forces them to because it's falling off a cliff for whatever reason.
But do you see anything for markets to be falling off a cliff right now?
I mean, I can think of a lot of reasons why it could. I mean, I think rates could go a lot higher, actually, because the government's not going to quit spending money, right? And so as the government spends, that tends to push inflation higher. So I would say unless it kind of goes back to, I kind of have a similar view on equities, rates, inflation. Like unless they fall off a cliff and fall really fast, I think they're staying at this level or going higher. In other words, I don't think inflation is just going to tick lower slowly. I don't think equities are going to just tick lower slowly. I don't think bonds are going to just tick lower slowly. I think it's possible, for a number of reasons, we have some kind of a repricing of everything. So I think the government will keep spending money. I think inflation, barring that fall off the cliff, I think it's going to remain sticky. And if we even get a couple prints that are at these levels or a little bit higher, then that could dramatically reprice equities pretty quickly.
I think the government.
But then, we can also bring in all the geopolitical stuff, right? Now we're leading up to election. That's going to start, more things are going to start being said, more things are going to start happening and from both sides. So I think there's plenty of things that could, and then again, when you're at all-time highs, this is what people forget. You don't really need a catalyst to send things lower. You just need buyers to stop showing up, right?
Yeah.
You don't need a dramatic thing to the downside. It's just if people think that the upside is now somewhat capped and they don't come in every day and buy, that can lead to asset prices falling.
Yeah, I think your statement that the government will keep spending money is probably the safest forecast you've ever made.
Yeah, I'm not too worried about that one. That should be correct.
Yeah, I think we're safe. Albert, why don't you come in here? What are your views on the Fed, given the minutes and kind of the outlook and what you're seeing with, say, fiscal spending?
Well, I mean, honestly, rate cut probably on June is out of the question. I don't even know why we would even discuss that. But I always said most likely end of July, if not then September, just before the election. They don't care about looking political. Look what they've done in the past, few years, right? I mean, we were starting to talk about the VIX. I mean, the VIX said the VIX is, what is it? The front.
12.
Is it 12? No, it's not 12. Is it? It's 12.
It's a 12. It's a 12. Yeah.
Well, they still have another 3/4 of a point to be crushed before things start getting extreme. So we're just about, like Brent said, at a level where you can buy insurance super cheap right now in the puts. I mean, it's just, why would you not do something like that, right? I do have a disagreement with Brent, which people want to see because they.
And it's not Michigan football.
Wow. we'll let that blasphemy slide for a minute. but when it comes to why the markets have been just so bullish, is, it's really liquidity driving the markets. I mean, the fundamental macro is a distant second at this moment. They canceled QT by bill issuance and left COVID liquidity in place for the last 4 years. Right. And as long as Brent said was correct, as long as, we stop raising rates, and everybody knows we're not going to be raising any more rates. I mean, you're getting into an effect where, sure, what's to stop this gravy train up until the election? There's really nothing outside of some kind of like outlier that happens with like China invading Taiwan, or, a meteor hitting India or something like. God knows, the problem that I do see is the valuation models look absolutely like crap because the rates are so high, but nobody cares. This is a thinly traded market in the summer. Elections are happening. Fed speakers are going to go out there and say whatever dovish thing they can possibly say. Until then, I don't see why we go down to 5,100 or 5,000 in the market. Not until after the election, in my opinion.
So you think things are safe? We're in a decent range for a while. Do you see any catalyst for things to rise dramatically?
No, because, I think they're, like Brent was saying, is problematic is like, where do you find buyers at 53, 54, 5,500, right? I mean, you're starting to get into like stratospheric valuations that just don't make sense. I mean, they don't make sense now, like Nvidia, right? But, then it starts just getting wacky world up there.
Okay, let's talk about Nvidia for a second. I know there's been tons of analysis over the past 2 days, but you brought it up. So talk to me, Albert. What is the case for Nvidia right now?
As long as you believe in the U.S. Being a superpower economically, and the markets being the most liquid in the world, that's your bull case, right? There's nowhere else to invest right now. It's part of the Mag 7. They use it to pump the markets. Why would you not get into these things? Right. If you want something bullish, you're hard pressed to see anything outside of U.S. tech right now. I mean, that's just my basic, simple answer.
Okay. Great. Or copper.
Well, let me jump in real quick.
The
I think
Inflation Reduction Act also helped with that, because there's a lot of.
Sorry, what's that, Tracy?
As well. Sorry, the Inflation Reduction Act is also helping propel the chip industry in America as well, because there's a lot of subsidies attached to that. So
CHIPS Act, IRA, all that stuff.
Yeah, it's government spending money, like Brent's saying. It's government spending money.
Yeah.
It's not real.
Brent,
well, what's kind of interesting about this is, I don't disagree with anything with what anybody said, but kind of going back to what could cause a market sell-off is if for whatever reason Nvidia pulls back 15%. Which, I mean, it could be down 15% this afternoon, this thing, right? I mean, that has a huge impact on the overall market because of, I know you've spoke with Mike Green several times, the rise of passive investments, market cap weighted indices. The higher something goes, the more the indices have to buy of it. And then it creates this, structural inefficiency in the market where everything goes up at once. But then if it turns down, then people have to start selling it because of the passive weighting. Then you could get like a flash crash scenario, as an example, where the whole market goes down 5 or 10% in a day or two, and then everything resets again, right? And so that's the kind of impact that that Nvidia has on the market right now. As Nvidia goes, so goes the market. Now, you can say that's a good thing or a bad thing, but that's just kind of the way it is.
It's like a scripted thing at this moment, right? They crush VIX, they crush oil. They let these Mag 7 tech stocks either propel the market or at least cushion the market from other bad news that they already know, with super user lists, being leaked to individuals. They know these things, right? And that's just silly at this point. I mean, it's like for the last 3 years, all I see is repetitive action. Oil goes up to like 80, 90, people freak out. Oh, it's going to go to like 150. The next thing you know, it's back in the 70s, right? And then VIX all of a sudden is following it at like extreme lows. It's just over and over and over again. It's like the same thing that I keep seeing, and it's like, as long as that's not changing, why would you short this market?
Good points.
Yeah, I think this is a very tough market to short. like I said earlier, I think it's a good time to maybe take some profits or buy some puts, but it'd be very tough to just outright short it.
Yeah, and I was talking to a hedge fund guy, a friend of mine, right? And we're talking about the long bond, right? And they're old school bond traders, this and that. Oh, you got to look at the bond market, blah blah blah. And I just said to him, I'm like, listen, the entire long end, like the 2030 year, is about $3 trillion, right? They can easily buy the Fed or Treasury can easily buy the entirety of it using leverage with only $500 billion in cash. Right. And then they sit there and they lie to all the hedge funds the last couple of days on a parade saying, oh, well, we might lose control of the bond market and so on and so forth, and pretty much wiped all those bond traders out. And next thing you know, they're pumping the bond market today like 2 point or 2 points to rally the market every single time. It's absolutely insane. Like I look at the long bond, the ZB, and I'm just like, well, if it goes under this level, it's game over. We're going to go down like 200-300 points in the market, and lo and behold, it pumps up, right at those like key points. It's just, for me, it's just like, it's frustrating. You want to be fundamental, right? I'm not taking anything away from fundamental macro guys and chartists and whatever, but it's just so hard to take any of that seriously right now with such like artificial manipulation going on in this market. I can't do it. I can't short this thing right now. Come September, different story. But right now, it's game on right now.
No, those are all good points. Hey, we've had a couple of viewer questions. So these came in through Twitter overnight. So I want to ask you guys a few things. So Brent, someone asked, where along the timeline are we in the milkshake, and how do you envisage the next 6 months playing out?
I mean, the next 6 months is so tough, right? I mean, I don't tend to make 6 month predictions, but I think the easy money for the year has probably been made. I think the next 6 months will probably not be as good as the last 6 months, but like we just said, I'm not massively short this market either. I think it's a good time to have some protection because I think the second 6 months of the year will be less volatile than the first 6 months. Now that again is a fairly easy prediction when the VIX is at or near its all-time low, right? We've got a number of stuff geopolitically. We've got the election coming up. We're going to know more about the Fed. And I just think the further you go along in time, the more likely you're going to have some unknown variable pop up that not everybody was ready for. And then the VIX jumps to 20 or 25 or whatever it is. And, things sell off as a result. Mm-hmm. The other thing that I think is pretty interesting. Oh, so this goes back to, let me answer the question. I think we're maybe in a 9-inning game. Maybe we're in the 3rd or 4th inning. I mean, I think there's a lot of people who know that we're at kind of this unique time in history. There's a lot of stuff going on. And because we're in this get it now culture, like immediate gratification, they want this big explosion, whatever it is, whether it's, economically or militarily or geopolitically, they want this big crescendo and then be over and then we're on the other side of it. Right. But I don't think it's going to play like that. I think this is going to take another 5 or 10 years to play out. I think these big macro themes take a long time to play out. Geopolitical things take a lot longer to play out than people generally think. And so there's going to be ups and downs, but I think this game is a long, I don't know if anybody watched Game of Thrones. I've been using that as kind of an analogy recently. The first season was great and it came to a great crescendo at the end, but then heck, there's 6 or 7 more seasons, right? And that's the same thing now. We're going to see little wins along the way. Some battles are going to be won, some battles are going to be lost, but this is a multiple season show that I think we're watching. And where I think it gets really interesting, and I'm interested to get Tracy's thoughts on this, is my friend Michael Every. He works for Rabobank. I don't know if you guys are familiar with him or not, but he has this opinion, and I listen, I'm totally on board with him. He says it better than I do, so I'm gonna plagiarize him really badly. But basically, he says, up until COVID, the most important thing was who could produce the most efficiently and cheaply the most important widget. Right? It was globalization, specialization, trade with everybody, one supply chain. But then COVID happened, and then not only COVID, but then some geopolitical things, and now that is no longer the most important thing. It's no longer the most important thing who can produce it the cheapest, because you might not buy the cheapest option because that might be your enemy and your enemy might not sell it to you anymore. And so now we're moving towards, to supply chains, but that also means that certain commodities, whether it's oil, whether it's copper, whether it's natural gas, like these commodities have national security implications all of a sudden. And so you're no longer just going to have quote unquote free market to the extent we've ever had free markets, which I would say we probably never have, but we're going to have even more government meddling in markets, especially nationally strategic assets than we've ever had before. Whether it's Biden and the Strategic Petroleum Reserve, that's a pretty easy example, but there's going to be other examples as well. And so I think there's a lot of people out there who feel like, we're in an era where central banks have to print, fiat currency is going to be debased. So all you have to do is go buy hard assets and sit back and wait. And perhaps if you don't have to mark your book to market month to month or quarter to quarter, and perhaps if you have a 10-year time horizon where you don't even have to look at your account until 10 years from now, that plays out. But I don't think it's going to be easy. I don't think you can just go put all your money into hard assets and commodities and sit back and expect a smooth ride. I think it's going to be actually very hard. So I'm not saying that commodities are going to go lower over the next 5 or 10 years. I just don't think it's not just an easy call, because I don't think we're in a typical, environment, throughout the world right now.
Can we park that commodity discussion for the next segment? Because I want to hear
Sure.
all that. So if we can re-ask it in the next segment, that'd be great.
Sorry about that. I
no,
jumped the gun.
That's good. No, that's good. But Tracy, I definitely want to hear this, and we can start the next segment with Brent's question. Okay. I also want to hear about currencies. Okay. There's a question about CNY, JPY, Korean won. Where do you see those heading in the next few months, Brent? And I'd love to get Albert and Tracy as well. But obviously we've seen huge depreciation in CNY or in JPY. We saw a brief devaluation in CNY, and then it kind of stopped. So, and then Korean won, we see Korea is trying to play the middle of those guys, right? So what do you see happening in Northeast Asia as far as currencies are concerned? And of course, we can't discount the dollar from that discussion as well.
Yeah, I mean, I think in 2022, I think the U.S. and the Bank of Japan, so the Fed and the Bank of Japan, I think they were very much in contact. And the yen doesn't go from 110 to 150 without the Fed saying, "Okay, no problem." It just doesn't happen.
Exactly.
I don't care what anybody thinks. The idea that happened and there wasn't multiple discussions and the U.S. didn't bless that move is, it's very naive. So, now they're in a situation, and I think they largely did that because I think in 2022 the U.S. was weaponizing the dollar. And I'm going to use another example from Game of Thrones here, so stick with me. And people may think I'm crazy, but this is the way I see it. In 2021 to 2022, the U.S. said, "Okay, we're in a new environment now. We've got to figure out who's loyal to us and who isn't. So we're calling our bannermen in, and you're going to stand by me, or you're not going to." And the ones that were maybe on the fence, or the way they made sure that everybody stayed with them, is they raised rates and they put everybody under pressure, because it's much easier to get people to negotiate with them if they're under pressure and you're not, right? And so, and I think that by having the yen fall, it also puts pressure on China, because it's a competing currency. Japanese goods are then cheaper versus China. It puts pressure on China. And so I think that's what was going. And then, in 2022, we were putting, Europe under extreme strain, and many of them were probably saying, "Shit, I would really love to buy just my energy from Russia." And the U.S. put them under so much pressure, they didn't do that. So I think that's what largely was going on over the last couple of years, was everybody was kind of figuring out who's on my side, who's on your side. Let's get our ducks in a row before we have the big battle, right? And so once they got their kind of ducks in a row, then they kind of eased off on raising rates, and they kind of got everything back. The dollar pulled back to 100. Now it's like around 104. And so now I think it's largely going. I think the surprise to the markets is if the dollar gets away to the upside. I don't think the Fed wants the dollar going a lot higher heading into the election, right? I think in general, they would like the markets to kind of stay smooth and keep going up into the election. They want to get Biden reelected. Now, what happens is if for whatever reason it gets away from them, because while I think they can to a certain extent control what's going on, there are moments in time where it will get away from them and then they have to kind of reassert control. So I have a hard time seeing the dollar rally hard into the election unless it kind of gets away from them, so to speak. Now, what would cause it to get away from them? You know, I don't know. I'm not a wizard. But in general, I would. But I also don't see the dollar going to 90 over the next 6 months either. Now, can it happen? Yes, it can absolutely happen. And so then people will say, well, see, Brent, then the dollar isn't, you know, it isn't impossible the dollar will fall. And what I would say this is, I want people to understand that this is why I say we're only in inning 3 or 4. The dollar can absolutely fall. But if the dollar falls, that is not the U.S. losing. The dollar going back to 95 and assets staying elevated, that's the U.S. winning. That's the status quo continuing as it is. So, you know, all that would do is it would just confirm my belief we're only in the 3rd or 4th inning as opposed to the 7th or 8th inning. You know, regardless of how long the game takes, I believe it's going to end with the dollar going much higher. Now, and I've laid out my reasons why numerous times. But over the next 6 months, I think I don't think the Fed wants a surging dollar over the next month, so 6 months. So, you know, they've pretty much made it clear that they want to cut. So they're going to be looking for any reason to do so. So the only reason I think the dollar really goes higher, significantly higher, is if it gets away from them. And here's the thing, is that's the kind of insurance that I think you need. In general, the Fed put still exists. So the Fed has you covered from a small pullback in the market. What you probably need protection against is it getting away from the powers that be, the dollar going back to 115, some kind of a surging move lower, you know, yield spreads blowing out and 2 countries going to war with each other or whatever it is. That's the kind of insurance I think you need right now that you need to purchase on your own, because the Fed already has an insurance policy taken out on you that they're there to protect you. If we get a 10, 15% down move, the Fed's got you covered. But if for whatever reason something goes wrong and we get another COVID or we get a flash crash or we get some kind of a military conflict that comes out of nowhere and the markets are now down 20 or 30%, that's what you kind of need protection against.
So what you're saying is
Bird flu.
yeah, bird flu becomes a thing.
Yeah, right.
The Fed's got us covered. Good. That's good.
I think the Fed put is very much here. It's just a matter of how much, you know, how much damage is done before they react.
Yeah, I mean, everything I'm hearing tells me that the powers that be see us in a very it's that kind of perfect porridge temperature. Not too hot, not too cold. They're really happy where we are, and we really don't want to move much before the election.
Yeah, I mean, the only thing I have about the argument of a surging dollar is that they're very cognizant of what that does to allies, specifically the EU. I mean, you start seeing a $1.15, the EU's in serious trouble. I mean, to the verge of economic collapse, and they're very keen on not letting that happen. So, you know, as the dollar gets higher, which I do think it's going to get higher, I do think it's going to get to like 110, 112. But as it gets up there, you will see a lot of resistance and restraint by the Fed and Treasury to make sure that nothing explodes overseas.
Okay, so dollars at 105 right now. Okay.
I mean, what could cause the dollar to surge is if I mean, China's got real problems. I know people probably tired of me saying this.
Those guys are so
I just
smart,
think,
Brent. They make all the right decisions.
Yeah.
Everything's planned decades in advance. They're so smart.
No, exactly.
They have us right where they want us.
You know, it's funny. I'm in the middle of writing a report right now, co-writing a report on the impact of the Chinese real estate market on the rest of the world's real estate markets. And listen, the Chinese stock market is or was, I don't know if it still is, but it was the largest asset class in the world. And it's come down dramatically. And we still think there's a lot more pain in that to come. And one of the ways that so China is facing deflationary pressure inside because of all the bad debts in the real estate market. And one of the ways they're trying to let that pressure out is having the yuan fall in value. And that's why the yuan has been under pressure. One way that they could dramatically release that deflationary pressure is if they did another mini deval or a bigger deval. Now, if they devalue their currency, that helps them, service their own debts easier to relieve some of that pressure. But then that sends a deflationary wave to the rest of the world. If I put on my conspiracy hat for a second, one thing that I think that could potentially help all involved, and when I say all involved, I mean the US, Biden, China, Z, kind of everybody together, is if they did some kind of a coordinated mini deval of the yuan between now and the election, that may help everything. Because if you think it's going to happen anyway, and if you might want to try to do it in a way that you can control it rather than just letting it happen and it kind of blowing everybody up. But if they did some kind of a coordinated mini deval, in other words, they all agree that China's going to devalue their currency by, I don't know, 5%, not 20%, but just 5%, relieve some of the pressure. Maybe the US gives them a little bit of dollar financing. I don't know if they'll give them a swap line, but some kind of a deal to help them provide, some dollar liquidity. What that would also do, that would take some of the wind out. That would send a little bit of deflation to the rest of the world. It would probably take a little bit of the wind out of the sail of some of the commodity prices. It would help get inflation under control, leading into the election. Which I think Biden, inflation is going to be one of the things, that Biden's going to get hit for. So it wouldn't surprise me. Again, I'm not predicting this. I'm just saying if something like that between now and the election would not surprise me. The problem with doing something like that, and the reason they might not, is because when you start messing around with currencies, then you're opening up a whole new can of worms, and you can get all these unintended consequences that happen. And
well, there's also a lot of
that's what they don't want to disaster. But here's the thing. The reason I'm saying that, because these people are so arrogant that they think that they can control the whole world, that they might try it anyway. That's
when you
say
said
that,
people,
that's
you mean the
point
Chinese economic planners? When you said these people are so arrogant,
exactly.
I mean the Chinese economic planners.
Well, no, all of them, the Fed, the PBOC, the BOJ, all Biden, all these people. I mean, they're, no offense.
To the Fed's
they're a bunch of psychopaths.
Yeah, to the Fed's point, when they think that they can control the whole world at this point in time, right now they can, because China is nowhere to be seen. The Europeans are nowhere to be seen. There is nobody else at the moment. So right now they have no pushback from the international markets. But when that does come back, right, when money starts flowing out of the US, overseas markets again, then you will see a problem with the Fed and the Treasury. That's when these issues that Brent was laying out start to come to fruition.
Yep.
So Brent, CI Markets, our product, has USD CNY going to 7.55 by October. Is that enough of a mini deval from the 7.2 something now? Is that enough for you, or do you think it would have to be more than that?
I think it would probably. Well, I mean, I think that could easily happen. I think it probably will go to 7.5 by the election. I was thinking something more like towards the 7.75 or 7.8 range. Again, if they did it in a way and they announced it and they said, listen, we are doing this and this is the reasons why, and we're all coordinated and we're all working together, but then maybe going to 7.75 or 8 wouldn't be let me explain. If we wake up tomorrow and the CNY is at 8 and they don't have any explanation for it, that starts to cause all kinds of problems in the market.
But keep in mind,
just because of the uncertainty involved in it. But if they come out tomorrow and they say, hey, we're all working together, the CNY is going to 7.75, this is what we're going to do to mitigate any ulterior circumstances, then maybe it's not such a big deal. Does that make sense?
It makes sense. I'm going to push back on that a little bit. You're probably right, but I remember all too well August of 2015 when the PBOC
Yeah.
tried to deval and they completely screwed it up. They tried to have good communication. Nobody believed them. It overshot. It was embarrassing for everybody, right? And so
Yeah,
that is hard carved into their brains. That's the first thing. The second thing is, you know, I suspect that part of this initial gold move was, you know, Chinese, say wealthy people suspecting PBOC was going to deval. They moved assets offshore and put it into gold. And then the PBOC said, okay, wait a minute, we can't do that because there's too much stuff going offshore. So I think it's possible that they face some serious headwinds in doing that. They're going to have to do it, but it's not going to be.
Yeah, I think it's inevitable. I guess that's my point. Is I think the currency has to get devalued. It's just a matter of whether they announce it or whether it just happens, right? And
Yep.
so, you know, again, I'm not smart enough to know for sure exactly what they're going to do. I just think that that's an inevitability.
The only issue I have is that G would look weak, and I don't know if they want to
Yeah.
devalue in the near term is the problem. You know, it just because the
It's-
perception.
he's in such a tough spot right now. I
He
mean,
is. Yep.
really, he really is.
Yep. His best friend's Putin. I mean, he's in a very tough spot.
You know, on top of that, any kind of deval in China and, you know, actions of the Fed starts, you know, creating inflationary problems with commodities. So it's like, you know, they're cognizant
For
of that.
them.
all.
Yeah, they're damned if they do and they're damned if they don't,
Yep.
right? If they don't devalue, then the deflationary pressure from the real estate market kills them. If they
Mm-hmm.
devalue, then the inflationary pressure from the inputs that are getting imported kill them. So
There you go.
it's a really tough spot.
And it's a problem they created themselves. So
Yep.
Tracy, let's, Albert, you're mentioning commodities is perfect. Tracy, let's move over to commodities. I want to talk about what stops the commodity bull that we've seen for the past few months, gold, silver, copper, et cetera. They've all fallen a little bit late this week, but they're still up 15, 25, and 22% respectively year to date. So doing pretty well, good moves, and they've got a lot of focus from markets. Some of the ags are doing their seasonal thing of starting to really rally heading into summer. But earlier we saw cocoa with a 3 to 4 times rally from Jan until late April, and then it fell pretty dramatically, but it's still up 2 times year to date. So that's still better than even the metals performance that all the gold bulls are bragging about. So couple questions. Why are these metals rallying? Is it kind of on the China thing that I was mentioning? Can you talk us through gold, copper, silver? Why are these metals rallying?
Well, I think you have to differentiate all of these to begin with. So you have the industrial metals, which is obviously copper, but what people don't realize, if you take a look at the silver market, it's not only a precious metal, even though it's in that category as a store of value, so to speak, with gold, but 45% of silver usage globally is for industrial purposes. And so it's kind of that bridge metal, I like to say, between, you know, yes, it's a precious metal, store of value, but it's also an industrial metal. So I think we have to separate all three of those in terms of, you know, why is this rallying? Why is gold rallying? Well, I think, you know, that has to do with, we've seen a lot of central banks buying. I think that, and the reason for this, I think, is in part due to the fact that basically we took Russia's funds, right? And we're giving some of them to Ukraine, as a matter of fact, and that is kind of unheard of. And so I think what we're seeing here a little bit is other central banks are like, yeah, we're allies with the US, of course, but, you know, what if we get on their bad side? They decide to confiscate our money. I mean,
Right.
you know, I think you just have to factor that in, and as well as, you know, as far as speculation is concerned, I think a lot of people are unsure if we're talking about the speculative market in general, not just the physical buying from central banks, because central banks will buy, they don't care what the price is. If they want to buy, they're going to buy.
Tracy, I want to go back just a minute. When you said we took Russia's funds, I want to make sure that people understand what you mean by that. So the US Treasury seized assets that the Russian central bank had sitting in the US and in London, I believe, right?
Correct.
And
Correct.
so that's a precedent that it isn't unprecedented, but it's a
International, no.
Well,
Yeah,
the freezing of them is not unprecedented, but then taking them and spending them on a war against the person you took it from, that's fairly unprecedented.
right. And so
Right.
because of that, Tracy, you're saying more central banks are buying gold because they're worried about the US potentially taking their assets.
Well, I would too, even if you're.
I would too.
So yes, that's what I'm referring to. And so, and then if you're talking about the speculative side of the gold markets, I think that there's a lot of, I think people are kind of more unsure about what the Fed is doing or what central banks are doing in general. I think when we had that pivot in December, that like 180 pivot from the Fed where they were hawkish, and then they came out very dovish in December. That was kind of the start of where we saw gold really start to rally. I think people were like, "What, do you even know what you're doing? I don't know. I want to put some of this in my portfolio, just to be on the safe side." And so, I think that's really what helped propel that market. And when we finally broke that, technically speaking, when we finally broke that triple top, came back down, retested, and then the rest is history.
Okay. So we had a question, and I'm curious about the differences between the mining stocks and the commodity price. So someone on Twitter asked, why did gold and copper stocks get crushed this week while copper and gold prices did not? I know there's a lot of difference between the commodity itself and the company, but can you talk a little bit about why that happens sometimes?
Well, first of all, really that happened. I mean, gold did come down yesterday quite a bit, and copper has come well off its highs for well over a week now. And
I mean, yeah, copper's down 10% in a week.
yeah,
I mean, that's not a small move.
right, exactly. And so, and I think I saw that question yesterday on Twitter, and I think that, we saw a giant pullback in the S&P as well. And so there was just a lot of selling on the equity side of all those commodities, which include miners. I think the only thing green yesterday was Nvidia.
Pretty much.
That's right. Yeah.
Okay, so as we're heading into summer, there's always expectation of the summer travel season and gasoline prices come up. Now, crude is still 6% higher than it was in January, maybe a little bit higher as of this morning, but it's well above its long-term prices. And you and I have talked about this many times before, where people say oil is not performing very well, but it's still very far ahead of where it has been historically. So what do we expect to happen with crude prices? Do we expect that summer demand to push crude prices higher? Or is there a range until we figure out, we are or not in a recession or whatever?
I think, and I've been saying this since last year. I said we're in a sideways market for crude oil, and it's not a bad thing. Where we are price-wise, it's not a bad thing. Everybody's making money at these prices. When you're between, $70 and $90, that's a great price range to be in. We don't want to see sustained oil prices over $100. It's bad all around for everybody involved. And so, it's a wide range. Absolutely. So traders love this kind of market.
Right.
Because you have parameters, but this is not a bad place to be. I expect us to be range bound. I think we probably going into summer, and this of course depends on the OPEC decision coming June 2nd. Now they did just announce this morning that the June 1st in-person meeting in Vienna is canceled, and they're just going to do this over video. So in my opinion, that pretty much means they already figured out what they want to do. They don't need a big sit down in Vienna. So, and to me, that says highly likely everything stays the same, including the voluntary cuts of the 8 nations that are not included in the already OPEC plus cuts.
Okay, so one of the things that I'm a little bit surprised by is when the president of Iran is assassinated, helicopter crashed. When that happens, markets didn't move at all. So what, I mean, that's a huge geopolitical issue that I think if we were to game this out without knowing the output, people would say, oh man, that's terrible. It's going to have a huge impact on oil prices. But really nothing's happened. So what, what does it take geopolitically to move crude markets?
Well, I think that's part of the reason is in Iran, it's the hierarchy of the system. The president is basically a figurehead and really doesn't have that much power because it's a horizontal from the top down kind of political system. So, it is a big deal. I'm not saying it's not a big deal to have a president of a country die, but as far as, that's not going to change oil production in Iran or change, exports from that country whatsoever. The country's still going to move along as it's been moving along, aside from the tragedy.
Right.
Can I jump in
Yeah.
real quick? I'm sorry to interrupt. I just want to say something. I would disagree slightly here, Tony, and what I mean by that is on Sunday night and Monday, strategic commodity prices did move higher. Gold was up fairly big, oil was up, copper was up, silver was up. And it was really only on kind of Monday afternoon, Monday evening when we got more information and it didn't look like this, I mean, if they had found the helicopter and it had, clear indications that a missile hit it, I would have expected them to continue going higher. But, when they finally got to the crash site and it looked like, at least from what we've been told, not, ulterior motives or foul intentions, then oil started selling down and gold started selling down and copper started selling down. And here's what I think is interesting about this is because especially in copper and silver, gold to a certain extent, I'm not sure about oil, but definitely copper and silver, positioning and sentiment had gotten fairly extreme already before this happened. And then this happened and it shoves even more speculators on top of it. And you kind of get that little blow off top feeling on Monday. And then as soon as there's no more escalation of that event, then you start to get the waterfall. And that's when copper started falling. It fell 5% the first day. And, gold took a big hit and silver took a big hit. So I don't think it's fair to say that the markets didn't completely ignored that thing. And perhaps something happens over the next week where we find out that there were some shady dealings with this helicopter and commodity markets take back off again. But I feel like they surged on the news, but then as more news became available, then they fell.
Iran actually just came out today and said that it was an accident, but officially.
No,
Okay,
no
okay,
foul
right.
play or anything like that.
Yeah,
And
I don't
think
really think he was assassinated, just to be clear there. I mean, it was a 40-year-old helicopter on parts. They couldn't get new parts for it for like a decade. Just doesn't make sense to transport a president of a country in a vehicle like that, but they did it anyway.
Well,
Go ahead, Albert, sorry.
So this is, I'm glad you said that, Tony, because I want to make a point here. We don't need to spend a lot of time on it, but there's been so many people who have told me over the last 2 years that sanctions don't work. Iran, Russia, all Venezuela, they're all stronger than they ever were. Their markets always figure out a way, that you can't stop these countries that are, resource rich. And listen, I tend to agree with that. But to say that sanctions have no impact is wrong. Because if sanctions had no impact, then these countries would not want the sanctions lifted, right? So they do have some impact. And to your point, this was a very old helicopter. It was difficult for them to get parts for it. That same thing is happening in Russia for certain, industrial machinery and aircraft, and it's happening in Iran. And so this is
It was
these are the
actually a
types of
1968 helicopter made in the US.
Okay.
there you go. So I get the
Throwing in
point. My
some-
point is I tend no. I tend to, like, when the people say that sanctions don't work. Listen, I tend to agree with that. And largely Russia has done well over the last couple of years, but there are things behind the scenes that you don't really realize until things start to go bad that are not benefiting and are certainly not benefiting and are actually getting hurt as a result of sanctions.
I agree. I think it depends on the targeting and the duration of it as well. Like the ASML stuff on China, that stuff's going to hurt their chip industry. Albert, speaking of China, let's segue to the last segment. And we've talked about Russia and China many times, many times. Last week, Putin visited China and made pancakes with Xi Jinping, which was fantastic. They hugged. There was a funny video about their bodyguards checking each other out, which everyone loved. A lot happened, but really not a lot happened during the visit. They say they're going to scrap the dollar or whatever. Like, I'll believe it when I see it. This is always presented as some ominous relationship the U.S. needs to worry about or fear or something. So just kind of a very broad-based question. Why are Westerners so worried about the Russia and China relationship?
Well, because they assume that it's an actual, a legitimate adversary to the United States overall. And it's just not the case. I mean, our military is so far ahead of theirs, and our economy is so far ahead of theirs. They're just, honestly, they're more of a footnote right now than anything else. But we have nothing else to talk about, so of course we're going to have to use Russia and China as the boogeyman for a lot of things, specifically. U.S.
It's like in The Godfather when the families get together, right? They don't trust each other. They don't love each other, but they're kind of on the same side, so they have to work together.
Yeah, for now.
Frenemies. They're frenemies.
Right.
Yeah. But they're adversaries. Now, China and Russia, although they have some things aligned, for interests going forward against the United States, clear as day. When you look at Africa and you look at South America, they are absolutely adversaries there. They don't like each other. They're actually competing for market share and influence. Right.
But again, China, great long-term thinkers. They have their strategy figured out. They know exactly what they're doing. CNY is going to rule the world, or the BRICS currency, or whatever. So we have to believe that this is a huge ominous relationship. So we've seen over the past couple of days, China's Navy, the PLAN, has kind of surrounded Taiwan for naval exercises.
And all of Twitter is yelling, China's going to invade Taiwan in 6 months.
Right.
Literally on Bloomberg right now.
I wonder how many of those people understand the history of actually taking an island. How many people died in taking Iwo Jima and all these islands in the Pacific during World War II? Like, it is incredibly difficult to take an island. So, Albert, how worried are you about these Chinese exercises off Taiwan?
Not worried at all, really. I mean, when Russia was starting to build up for its invasion, it's a land invasion on top of that. You could see that they had troops amassing at the border and logistical supply chains and whatnot. You could see that they're building up. There's none of that happening in China at the moment. They can't hide that from satellites. You can't hide 500,000 troops at the ports. You know what I mean? Very well. This whole surrounding Taiwan thing. Yeah, sure. I mean, I could surround Taiwan with 1,000 fishing boats and claim that it's surrounded and whatnot. I mean, it's more of the same of China's messaging to Taiwan that they're displeased with the elections and the political process there.
Right.
It'll pass, nothing really will happen. It's just, it's one of those things where I keep reiterating, if China wanted to be adventurous like that, they're going to have their ports shut down for quite a long time. And I don't think that the Chinese economic system can handle that for more than like a month.
Right. It's interesting. This week we saw the Russian, I can't remember what they're called, the Governing Council, or whatever. They said they tried to pull kind of a South China Sea move that the Chinese did. They tried to redefine their maritime boundaries with Finland and Lithuania and other stuff. And as of last night, I saw that they had reverted course, at least on the Finland stuff. So it seems to me that Russia may be trying to learn from China and assert itself in some of these naval issues, but they're not able to for a number of reasons. So we see China go out, surround Taiwan. What is that going to do? I don't really know. So in terms of say regional power, China and Russia, and we've talked about this a few times, especially in Africa, but do they present a counter to the US in we'll start with Africa. We've talked about that. US has 26 bases or something there. Russia, China combined have 1, right? But in the Middle East, it seems like they could be a legitimate kind of counter to the US.
Only if they use proxies, right? Where Iranian, IRGC, Hezbollah, so on and so forth, ISIS, whatever factions you want. They are absolutely not a contender in Africa nor South America, and even really the Middle East outside of Iran and its little, proxies, but that's about it. They don't have the necessary military capabilities to move any troops in any sort of fashion. They don't have any logistical backup for any kind of air force. They have no carriers, right? China can't even go to Albania and invade the place at the moment, right? That's how ridiculous these kind of comments are. Like, oh well, they have 2,000 more ships and they can build far more than the United States. Well, yeah, they can build subpar crap, right? But at some point, technology and tonnage matters, right?
Right.
They do these war games, and I was on Twitter just ranting about it because I was so angry, right? They have all the CSIS war games of U.S. versus China, and they showed that the Chinese would take out carriers and blah, blah, blah. Well, what they didn't tell you is they allowed China to use every single piece of theoretical weaponry that they could think of anywhere, right? In any kind of book written in Chinese lore. And then they restricted the U.S. to using antiquated stuff from the 1970s and saying,
nice.
oh, yeah, look, it's equal here, Well, we wanted to do that because it wouldn't be an equal, war footing. And I'm like, that's not how things work, right? That's not how things work. That's not how these type of narratives either come out of anti-American think tanks or think tanks that are aligned with the military where they need to boost their budgets.
They need
right?
the funds. Exactly.
Yeah.
This is a way to get more funding.
Yeah,
You don't
of
get more
course.
funding by saying we can beat China. You get more funding by saying, oh my God, they're going to get us all. We need more help.
That's
Yeah,
exactly it, Brent. Exactly.
And I'm not saying that we should take our foot off the gas and develop technology, so on and so forth. That's not what I'm saying whatsoever. But let's just not have these doomsday predictions where China's gonna, China and Russia are gonna sweep up into Alaska and through Canada and take out Washington and Oregon and California. Which I don't know. I don't really know if I really care if they did that, but
yeah.
You know what? We'll just give them Michigan and everything.
Yes,
We'll keep everything else.
it's a great idea. It's a great idea.
They can have California, Seattle, and Oregon.
Well, they're the same Marxists over there anyways, so whatever.
So, hey, I want to talk a little bit about technology. So, in terms of, gosh, we need to be afraid of Russia and China. Russian technology, it's okay, right? It's not.
They have some great theoretical stuff. Don't get me wrong.
Exactly.
They've advanced some crazy theoretical stuff, but realistically, their stealth fighters are defunct. They don't really work. They don't. The stuff that they do come out, if you actually look at the photos, you'll see rivets that are like missing in some of the wings. Right? I mean, come on. I mean, what are we talking about here? Right? We have stealth bombers and like stuff from the 70s that is more advanced than what the Chinese and the Russians currently have.
Right. And with China, they have this new aircraft carrier and, whatever. It's just the thing that I try to say, help people understand about China is they're very good at the D side of R&D. Okay. They can develop things really well. The R part is really hard for them because they're in a culture, whenever you have authoritarian cultures, you can't think outside the box. And the R side of R&D is very, very difficult in those places because it's like I lived in Singapore for a long, long time. Singapore will never be a creative center, although they try to market themselves that way, because it's an authoritarian country where you can't think outside the box. Russia and China are bigger, bigger scale, and they have very smart people, incredibly smart people, but you can't think outside the box because you'll be punished.
Yeah, I mean, concerning they have three carriers, right? One of them was they bought from the Russians. That was an old Soviet carrier floating in Ukraine that was supposed to be a casino, right? Then they made a copy of that, right? And then their current one has a catapult system that doesn't work. So, okay, that's supposed to be some sort of challenge to the United States, as Gerald Ford.
Right.
I mean, what are we talking about there?
Right. With technology, let's also talk about chips. So we had someone ask about China getting 3 nanometer chips. They don't have that capability now. They have 6 nanometer chips. You know, is it the end of the world if China, at least right now, today, if China gets 3 nanometer chips? I think it advances them dramatically, but they're going to get it eventually, say 3 years from now or something. They're just not going to have it right now. So these things are kind of inevitable, right? That D side of their work, that development side of R&D, they eventually get there, right, with these things?
Yeah, I mean, of course they're going to get there at some point, but whatever they get, it's already 10, 15 years behind whatever the West already has in development. So it's like, sure, okay, they're going to get it. So what?
Okay, great. So, and then I'm going to end with this because we've been on almost an hour, guys. So thank you for your time. So there was a viewer question, Albert. It says, how do you see the election panning out? If it does indeed pan out that way, what can investors expect in financial markets as a result of the following 6 months? So who do you think is going to win, and what do you think is going to happen in markets in the 6 months after the election?
Well, I would tip it right now towards Biden just because the numbers of electoral college in the states in question, right? If Biden wins, I expect stagflation, right? And if Trump wins, I think he's probably going to let loose more printing and inflationary problems in the United States. We'll probably have another wave of inflation. So that's where I think it's going to happen.
Okay. Tracy, what do you think?
I will refrain from answering that. I have no
It's
idea.
okay to say you don't know.
I don't want to place bets on that one.
Yeah.
I have no idea.
Brent, what do you think? Like, are there
I-
dramatically different paths for markets if Trump wins versus Biden?
I think they are dramatically different, but I don't know what they are. And what I mean by that is, I think if Biden gets in, I think it's largely the same, right? Or if Biden stays in. If Trump gets in, I think he will change things dramatically, but he's just such a loose cannon. I don't know which way he'll do it. I could see him going in and, you know, throwing out Jay Powell and taking interest rates to zero, but I could also see him coming in and, you know, doing the opposite. And, you know, yeah, he's just such a wild card. I don't know how to handicap it. And I think to me, it's too early to figure out who's going to win. I think, you know, clearly just from a popularity standpoint, you know, Trump is a populist president, and he draws a crowd, and, you know, he goes somewhere and, you know, 200,000 people show up, and Biden goes somewhere and you get a couple dozen, right? But there's political machines behind. You know, I don't think the Republican Party loves Trump, even though he's going to be their candidate.
Right.
But the Democratic, you know, the Democratic machine is going to do everything they can, you know, to get another Democrat in there, whether it's Biden or somebody else. And
I don't think
you know,
I
defer to that. Yeah.
I don't think the Democratic Party loves Biden either. I think
I
don't
would
think
say
both
that
kind of marginally acceptable candidates.
out of 350 Americans, isn't it incredible that these are our two choices?
Yeah. 350
Sorry.
million Americans and 2 octogenarians are who we settle on. So,
Right. So, but I will say that I would say, you know, if Trump were president, then the LNG, the natural resource sector in the United States would have a lot less problems from the EPA on that, for sure.
Yep. Okay, guys, thank you so much for your time. This was really great. Thanks. Have a great weekend and have a great week ahead. Thank you.
Thanks
for having me.
Thanks.
Bye, guys.